Claiming at the Clinton Global Initiative's annual meeting. Liz, earlier you spoke to the CEO of one of the most valuable, respected brands in the world, Coca-Cola.
Yeah, who among us hasn't owned Coca-Cola at some point or another? Just a quick mention. There's nobody behind me right now because President Clinton is about to be in the House. They're doing a massive security sweep here in Midtown Manhattan. But we have many luminaries here, aside from Bono, the front man of U2. And we also have Sheryl Sandberg, the chief financial officer of Facebook. What do we have? We've got Muhtar Kent, the head of Coca-Cola. And he was right here with us just moments ago talking about a bunch of things. First of all, David, he's very concerned about the global economy, but more concerned that people have a negative perception. He said, just deal with it. It's going to be a very slow slog through the growth that we need to find once again. But he's looking everywhere on the planet for growth, and he finds it in Africa.
For the next 5 to 10 years, that Africa will be a very fast-growing environment macroeconomically. Why is that happening? Because there is small increments of improvement in governance in Africa across the board, from north to south, all across sub-Saharan Africa. That is generating positive momentum in Africa. We are investing over the next 10 years in Africa, $12 billion. That's double what we've invested in the last 10 years. And so we are a big believer in Africa, and we're one of the largest employers on the continent.
He's also a believer in the United States, and he says that this country and this government have got to figure out a way, like business people do, to compromise and make alliances and decisions so that we can all move forward. Hint, hint to all the congressmen inside the Beltway and the senators, as well as we come up against the debt ceiling. Okay, President Obama has entered the building, we are told, and we are just waiting for the security sweep to finish. He is expected to speak here at the Clinton Global Initiative coming up, David. So as I send it back to you, stand by because we've got more interviews coming up. Back to you.
Look forward. Thanks, Liz. Well, Treasury yields, as we mentioned before, falling to a 6-week low as the Dow and the S&P end the day in the red for the 4th day in a row. Let's break down today's action. We have Lincoln Ellis, Strategic Financial Group Chief Investment Officer. Bruno Del Alma is Global X Fund's co-founder and CEO. And Larry Shover's in the pits of the CME. Larry, you're out west. We want to start with you. Even when interest rates are down, we are still fretting about what happens with the Fed. But you say there's no way to end, expect a conventional kind of exit from what the Fed has been doing when you have such unconventional policies.
No, that's exactly right. And I was clued last week when the Fed came out and said, hey, we're not going to taper. That to me says this is going to be very unconventional. It's going to be very data dependent. And thus the market's really not wholly concerned about it. Yeah, we've had some downdraft the last 3 or 4 days, but nothing to really write home about. I mean, right now, I think the market's apathetic. It's bored more than it is negative right now. And so the Treasury yield backing up a little bit to 2 5/8, 2, whatever it happens to be. It's more just backing off of some of the drama we've seen. If you remember, we've talked about that for weeks, that this moving up to 3% was really drama of the unknown. Now that the unknown is kind of out of the picture, yields are starting to go back to where they belong right now.
And it scared the hell out of the market, scared the hell out of the Fed. I mean, that's why they came back and tried to go out of their way to assure the markets they weren't going to raise rates. All right, Lincoln, did the Fed mess up? Because everybody, just about everybody, I mean, there are a couple of people who say, oh, no, we knew that they weren't going to start their tapering now. Frankly, I don't believe most of them. But did the Lincoln screw up, or do you think they know what they're doing? Or are they just riding by the seat of their pants?
Well, look, I mean, if you are going to take the football away, as Lucy has proverbially done for Charlie Brown for that long of a period of time, you're going to introduce a new level of uncertainty into the market. And that's what we're beginning to see. Larry's right. Not only have we seen yields come back in after a significant run since the May time period, but we've also seen equity risk premiums also come back in over the course of the last 3 days. We would expect that to come back in further, a further 3 to 5% over the course of the next 3 to 4 weeks, as we begin to see third quarter earnings really flush through the system, margins come in, and future expectations about equity earnings really beginning to get repriced based on that kind of uncertainty that our own Federal Reserve has now introduced into the system.
Well, but Bruno, as important as the Fed is to all investors, and obviously the Fed's decisions have a huge impact on investments, do you think they know what they're doing?
They do know what they're doing. I mean, let's face it, they've been dealing for the last few years with a very delicate situation.
All right, let me push back for a second here, Bruno. Do you really think that going into this last Fed meeting, they knew among themselves, look, we know that the market wants us to stay steady on that. The market might tank a little if we go down. Therefore, I mean, I don't think they really knew what they were doing until they got into that meeting. Do you?
Well, to begin with, it's a committee, so it's not one person deciding for the whole committee. So to some extent, there's some people that have a certain opinion.
By the way, you have a slight accent, Bruno, so you said committee, not comedy. I would say it's a comedy as well, but go ahead.
Yeah, and so, you know, they certainly looked at the latest facts that they had in front of them. They discussed them. They did see some of the uncertainty that they had in front of them with regards to some of the Congress issues that we're dealing with, and they just decided we're going to wait a little more.
But, Larry, they're not facts. What they're dealing with are presumptions, many of which are dead wrong, like growth figures, for example. They've been wrong about growth figures for more than a couple of years now.
Yeah, they have been dead wrong about growth figures, but the thing that I think they've been right about or surprised with is the fact that we've grown even with the fiscal restraints that we've had on us due to the higher tax rates, et cetera. So we are making baby steps. The Fed, I don't think, is walking into a dark room. I just think they're being very, very careful about easing on anything with cutting back on tapering because they need to see the numbers to be more consistent in the future.
Lincoln, let me go to you with one market in particular that has benefited over the past couple of weeks with what the Fed has been doing. That's emerging markets. They were really getting hammered over the summer. They have come back with a vengeance. Do you think it's sustainable?
Well, look, easy money policy has actually been the sort of mother's milk of the poor parts of the emerging economies being able to borrow at extraordinarily low levels and re-leverage up their balance sheets and try to re-stimulate those export economies. Do we think it's sustainable for the long term? You have to distinguish between good and bad emerging economies. There are some good emerging economies that you would be looking at, China, South Korea, maybe Brazil and Russia. But, you know, on the whole, you have to know that all equity markets, all fixed income markets are right now very Fed-driven, very data-dependent, as Larry suggested. And I don't think anybody should be surprised. It surprises me that Ben Bernanke or anybody at the Federal Reserve is surprised that a move north of 3% in the 10-year was beginning to affect the housing market, or that a drop in the employment participation rate was actually accelerating a drop in the unemployment rate. I mean, these are very knowable, viewable parts of a reconfiguring of Fed policy.
Okay, so Fed policy is definitely helping emerging markets. Bruno, I beat up with you on the Fed. I think you're dead wrong about them knowing what they're doing. I don't think they know about growth figures. I don't think they know about how they're hurting savers. I don't think they know about inflation. I think inflation is a much more powerful concern of consumers than the Fed thinks it is. But you were dead on with Facebook. You've been saying this stock is being underestimated back when it was trading in the 20s, and now you appear to be right. Is there still time to buy into it?
Well, clearly, social media stocks are a lot more fairly priced than they were a couple of months ago. We do see that these businesses are actually going up because they're delivering against their business models. They're growing very, very rapidly on revenues and profitability. And so, yes, we do believe there's a lot of room to grow, not only for Facebook, but more broadly for social media stocks. And obviously, we're excited to have Twitter come to market fairly soon.
Right. And finally, very quickly, Lincoln, gold. Are you buying into it at this level?
Wouldn't be buying into gold, but the gold miners might be an interesting way to play it. They have diversified exposure in the copper, nickel, and other parts of the mining sector.
Lincoln Ellis, Bruno Del Ama, gentlemen, thank you very much. Good discussion. And Larry Shover, we appreciate it as well.